Never try to catch a falling knife is an ardent rule for old Wall Street professionals, and it is widely used to describe moments like crypto crashes. Cryptocurrencies have suffered through a bear market since their peak in 2021, and it is a far more perilous arena than the stock market. According to crypto analysts, the biggest opportunities in crypto can be accessed right now, even with the state of the market. But how can this be accomplished without defying the rule of the old saying from the Wall Street professionals? A few months ago, the Cardano founder, Charles Hoskinson, did not fail to admit that the market is in a new crypto winter, which will take weeks or months for a bottom to appear, and then there will be some relief. According to him, the digital asset market is in a phase of panic blood in the street. Back then, Bitcoin has managed to capture institutional interest, a feat that has often been celebrated. While the retail investors continue to hold crypto as they opted out of an unfair global system, Hoskinson believed that the foray of the Wall Street types into digital assets has worsened the downturn. Institutional cohorts were dumping their crypto, while most people were looking at it as a high-risk and high-return asset. This was always the danger of inviting Wall Street in, and when the markets do not get in the direction they want, they dump it. They treat crypto just like any other asset and label it as an exotic high-risk one. When the markets do not go in the direction they want, they dump it, Hoskinson said. Judging from Hoskinson's claims, a crypto winter does not signify the end of an entire industry. But why the unusual quietness? The crypto market embraced a bunch of new investors in 2021 who were captivated by the thrilling records of cryptocurrencies. But they are now experiencing their very first crypto winter. And this is not the first time the market has experienced a crypto winter, but this time it hits differently. Crypto winters are often marked by people losing interest in the crypto market as returns are stunted. However, it is important to note that the crypto winters are fixtures of the crypto space, similar to bear markets in the stock market. The last similar period of major losses that occurred was between 2017 and 2018, which largely was caused by the abundance of questionable ICOs and a burst of hype around cryptocurrencies. The current crash began earlier this year as a result of many economic factors, including inflation, which has caused the Federal Reserve and other central banks to hike interest rates. It was a brutal loss for cryptocurrency, diminishing by $2 trillion in value since a mind-blowing height of a massive rally in 2021. And there is a lot more people that are involved due to the rising popularity of crypto payments. It is safe to conclude that all financial markets are currently affected by the economic conditions because consumers and businesses are the ones suffering losses, thus reducing the buying and investing power of their funds. There is no definite system to predict the future of cryptocurrencies, underscoring the essence for crypto investors to adopt a realistic output on crypto winters, prepare for them, and take steps to weather their ups and downs. Since the current crypto winter affects both individuals and companies, some crypto entities are experiencing harsh consequences. Job losses have already been announced by crypto exchanges such as Coinbase and Gemini. Gemini's executives have issued a tough times ahead warning, while Coinbase will be laying off 18% of its workforce. According to the head of research at CoinShares, James Butterfield, there is a feeling that the pain will spill over into the crowded exchange industry. Given that it is such a crowded market and that exchanges rely to some extent on economies of scale, the current environment is likely to highlight further casualties. It is a mess out there, but from the perspective of certain crypto analysts, there is a big opportunity in this mess. It is possible to get filthy rich by investing in cryptocurrency, but it is also possible to lose all of your money. It is a risky investment, and that's why a diversified portfolio is essential. Despite the risk, cryptocurrencies in the blockchain industry have been developing stronger. Yes, it is a crypto winter, and things are bad, but the increasing pace of adoption is an indication of a maturing industry. Also, many cryptocurrencies such as Bitcoin and Cardano are launched with lofty goals, which may be achieved over long time horizons. The success of any cryptocurrency project has no solid assurance, but early investors in a crypto project that reach its objectives can massively be rewarded over the long term. However, for those ready to dip their toes into the crypto world, identifying the best time to invest is key. Managing risk is possible and within everyone's reach. Generally, building wealth is about patience as much as it is about timing the entry. Crypto assets follow cycles, and in this crazy world of cryptocurrencies, long-term investors are more likely to gain wealth than short-term traders. Traders utilize technical analysis to predict future patterns of a coin depending on several indicators. When a tweet from an influencer does not swing the momentum, timing the market with short trades is mostly harmful. Invest and forget is often considered a better strategy than worrying about the daily patterns and the chill from the crypto winter. Cardano ADA is riding high on its most ambitious and complicated upgrade as seen by its rate of adoption across multiple digital asset platforms. Tron Weekly reported that ADA was selected by the Japanese wing of one of the world's largest exchanges, OKCoin, to begin spot trading of the token against Japan's national currency. Cardano also went to outline as collateral cryptocurrency on futures platform of the US-based trading platform Kraken. The Vassal hard fork arrived in a crypto winter, but the chill has not affected the rate of Cardano's progress. In an interview with Cheeky Crypto, Charles Hoskinson stated that he has identified the catalyst which would end the crypto winter and spark a massive industry-wide rally. He said that if the US government were to pass the Financial Invocation Act, the crypto market would begin a mega bull run. The passing of this act will prompt blue-chip investors to overflow the crypto market with capital and also reduce the regulatory risk associated with investing in digital assets. I have been through 7 bull-bear markets since I've joined the cryptocurrency space, and this is no different. It could last 18 months. It could last 2 years. It could end at the end of the year. Who knows? And it's any given Sunday. If America passes the Financial Invocation Act, we would probably see a mega bull run market because a huge amount of institutional money would enter, and also all of the regulatory risk with crypto would disappear, he said. The Financial Invocation Act was proposed by Republican Senator Cynthia Lummis of Wyoming and Democrat Senator Kristen Gillibrand of New York in June, and is targeted at creating a comprehensive regulatory framework for the digital asset industry. If this works, according to Hoskinson's projections, who would be the beneficiaries of this mega bull run? Of course, it is those investors that have held on to their investment and also buy the dip. Trying to catch a falling knife, strengthened by solid research and experience, is not so scary after all. However, Charles Hoskinson also noted that the market can go the other way if regulators such as Gary Gensler are encouraged. These are his reservations anyways. If people like Gensler are empowered, we can see a mega bear market happen as a massive amount of litigation occurs and all these entrepreneurs just basically get put out of business by the heavy-handed government, he said. The Cardano founder does not seem worried about the crypto winter. If this was the case, the Vassal hard fork would have encountered another delay. In fact, according to him, bull markets are really frustrating because nobody wants to cooperate. It is always awash with poaching, unrealistic wages, and unrealistic expectations, while in stark contrast, bear markets are quite comfortable. They are the building parts. The crypto analyst and founder of the crypto capital venture Dan Garmedello shares the same opinion. Now is when we define the bear market bottom for months. During this time, it will become more and more quiet as people exit crypto. That quietness is the bullish macro signal we are all waiting for, he tweeted on September 29, 2022. During this period, if you are not exiting crypto, then you are either holding on to your investment with a glimmer of hope or trying to catch a falling knife. The biggest opportunity is right now. Market jitters are still rampant, and it is important not to get the wrong ideas about Cardano or crypto in general. But what are your thoughts on this? Let's have them in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.